this morning's U.S. Bank Economic 360, a topic that affects all of us. Higher oil prices and higher gasoline prices. U.S. Bank investment analyst Jim Russell joins us, as he does each week. Jim, we've seen it. We feel it at the pump. How high do the U.S. Bank analysts like yourself see these prices going?
Well, Brian, thanks. Good morning. This is on everybody's mind and certainly a topic that everybody's watching tick by tick. We have a graphic here that really kind of displays what has happened in gasoline prices in Ohio over the last year or so. You can see that this graph shows that we're really not at peaks that were established last spring, but we're headed much higher, certainly since October. Now, let me stop and pause here for a second. Gasoline prices are mainly determined by trends in oil prices, and oil prices are mainly determined by supply and demand. We think that demand for oil this year by the United States will actually be lower. In fact, gasoline demand is off or down 7% year over year by American drivers, and miles driven are flat against the last 4 years' data. So demand is really not going up. It is the supply concerns that we're concerned about. Iran specifically. Iran, of course, is in the news regarding military and political conflict with Israel and the United States. And unfortunately, Iran is the OPEC's second largest oil producer. So if oil stops flowing from Iran, prices are likely to move a bit higher.
We know these higher prices hurt at the pump, but they really hurt business. They affect economic growth and with that, jobs. What is the impact that you're looking at here?
Great question. There is a very close tie-in here. So far, the impact has been minimal. We are seeing consumer confidence levels hook up. We're seeing job growth hook up. We have some very constructive data on Friday, in fact, and we're seeing consumer spending hook up as well. So far, the impact has been fairly minimal. We do think, however, that should oil continue to move up, as we believe it will, and gasoline prices move up accordingly, it will start to bite. In Europe, gasoline is already at historic highs because the value of the euro is low. Oil prices are valued on global markets in dollars, so that figures in as well.
So what happens next?
We think that oil and gasoline will actually be at the top end of consumers' comfort level for most of this year. We don't think that the increase in gasoline prices is over, and we do think that consumers should brace for higher gasoline prices as we move through 2012. I will say that we do think the Iranian situation will not be resolved tomorrow and will be actually get a little nastier as we move through the year. So look for that to happen, and we do think that should gasoline get to that $4 or $4.50 per gallon level, that's where things start to slow a bit.
All right, something to watch. Jim Russell, thank you.
Yes, sir.